Welcome to the Pump and Dump channel for another video. This time doing the 1-year annual performance of the theoretical model portfolio. So as you can see here, this was the 6-month period from when I started it in I think it's June or July. I always get these messed up, which is why I forgot to make it a week ago, this video. Yeah, it was 20% over the first 6 months, and then you can see here the acceleration of performance as things that had been picked over the longer term reverted to fairer values, and the performance for the full year therefore is about 189%. But like if you compound it, you see how making 20% in this 6-month period and then compounding it by 139%, it leads to 189. That's just the math. You can see the formulas here. So I thought I'd also give some quick thoughts on the individual positions. So African Gold Group, still nothing new here, waiting for the technical report to come out to see what they have come up with in terms of increasing the valuation of the project, and seeing how they've grown reserves, how much by maybe 200,000 ounces or 500,000, who really knows, we'll see. And I don't see this going into production in the next year or two, which is unfortunate, but it is what it is. So we'll see what happens with African Gold Group in the coming months to years. PBF Energy, it closed at about $15.91, $16 almost on the 17th. So this represents still a large upside. I'm very positive on PBF Energy. I'm very confident of this $50 3-year target I put out. Even when I was doing it the other day, I had 58 as a fairer value, and here we'll see, of course, in the next quarterly report how their margins have improved, and we'll see also whether they are progressing towards the indicated increase in production that was set to come online again after they shut some of it down. So they have some idle capacity that's hopefully going to be back online, and when the market inputs that, the valuation should move even higher. Safe Bulkers, just as Diana Shipping, nothing really new here, just waiting for the share price to move. I saw a press release where they bought I think it was a Casmarax or Panamax vessel, and they paid way over what the vessels they have themselves are being valued at, based upon the the implied prices for the vessels in the stock market, how the stock is priced. So that is a bullish sign. If they're buying assets that are that are worth more than what their own assets are valued at, that's a signal that they know that what they have is worth more, and that by adding another vessel, they believe that if things keep improving, that will ultimately also add additional leverage and upside to their own stock price. And like if you have like a bunch of vessels that are trading at, I don't know, let's say 60% of fair value, and you add one at full fair value, that might just raise your average cost by a few percentage points, not too much, so it doesn't really have much meaning. But when the market turns bullish, they probably are hoping that that additional vessel will generate them, or at least their shareholders, quite a bit more additional money. So we'll see about that. CNX here, it's the same story. It's a very stable producer. Hedge book deeply underwater, which is protection for investors who are looking for a steady return. I guess the only risk is that they could get a margin call or something. I don't really know exactly the details about whether that could happen or how that would happen, but if it did happen, then that would probably be the top of the natural gas price, and then prices would deflate from there, and CNX would go down, of course, if they had to eliminate their hedge book. But for now, we'll see, of course, how these things go. Next, Petrobras and PetroChina, just churning along, just progressing slowly towards fairer values, it seems. There is a dividend that's been declared, so I'm already entitled to it, but it's not paid until August, I think. So I haven't included this in the performance. It's about $1.33 per share. So that would be like 80, $100, let's say. Um, the next position I already covered, Dana Shipping, Silvercorp Metals here. This one is my I would say least favorite at this point in time, since the silver price does look like it has topped. I mean, there's been lots of talk about it going to $35 to $40. I just think that if that would happen, it would have happened already, and consequently, I just do not feel so positive about it at this point in time. It's currently, I think it closed at 570 yesterday, and on the 17th it was at 588. So yeah, I mean, here things, going with silver and lead prices mainly, and there's of course always the upside that their investments that they have in New Pacific and other companies are worth a lot more than what they are being given credit for. So there is that potential upside, but I just I'm a bit concerned, and I've in my own portfolio reduced my position, and the money where it went was into Lundin Mining. I saw how it melted. I think it was yesterday, or no, I think it was Monday, or yeah, it must have been Monday. It went down like 10, 13, 14% because of revised guidance lower. And I computed the revised guidance, and if you didn't factor in that the lower production this year would be shifted to next year, then the impact would have been like 1 or 2% on the fair value of the stock. But it's, when it fell to like $8 and a few pennies, I guess, the other day, that was the bottom in my opinion, because there's an implied $3.30 copper price, which I don't know if I mentioned this in one of the videos in the past, but this is a number I had in mind looking at how the copper price bounced in 2008, I guess it was, from like $1.25 to $4 and something. And I just looked at that and I thought that the $3.30 copper price, like a drop to that price level, would be possible before it goes to 6. And if it's implied in the stocks, it doesn't have to be represented in the futures itself for a correction to have taken place. This is kind of how I see it. So I do think this bottomed the other day at 8 and change. So I've been shifting the money out of Silvercorp into Lundin Mining. I should probably do that as well in this theoretical model portfolio, but I just didn't do it. But anyway, Centuri starting to rebound. It's still around 12.20ish, I think, or 12.30. And yeah, this went lower than I thought it would go. It went to like 11 and change. But it is what it is. I still think it's worth at least 19, and potentially it could go to 20, 28 to 30 something. But in hindsight, if the aluminum price just created that would of course be out of the window. Next one here, Cabot Oil and Gas. I'm a bit disappointed in how it sold off with the rest of the market. I guess it's just like when all stocks in a sector are linked to a variable like the natural gas price or the oil price. Once selling in one stock starts, usually the rest follows, because I guess the people who own one stock are also looking at other stocks and comparing them one to one, and if they turn bearish, they start selling everything, and if they see something has dropped already, they'll sell something that hasn't dropped yet, and they'll rotate out of one that is seemingly overpriced relative to another. And then as everything else keeps falling, it just cascades, and these kind of sell-offs, it is what it is. Yeah, I guess that concludes this video then in that case. So going to leave it with that. That's the year-end performance looking over a 1 year period. It's split in two halves here, but it is 1 year. If you look diagonally here, there's the calculation to verify that these total profits and losses correspond to the compounded rates of return. And yeah, we'll see then. I guess going into the next year how it will end on the around the, I guess, the 17th or 18th of June, July, whatever it is, 2022. So yeah, remember, as always, not investment advice, not recommendations to copy, to buy what I buy, to sell what I sell. And with that said, have a good day.